Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So today we have discussed some specific questions about the banking crisis and Fed steps that have more has a tighter relation to the gold market performance. So it's mostly related to amount of the possible money printing and what actually Fed could do in the current circumstances. Also, some political issues also exist, and well, probably this overall some tensions in political sphere will also bring some uncertainty and will press on risky assets in the near term. So from that standpoint of view, we suggest that actually Fed has no chances but have to print money. It has no actually other exit from the problems that it actually has. Because obviously all funds that banks have generated in a decade or even few decades of the low interest rates now are invested either in the real sector or consumer credits with the relatively low rates. But the funding for these loans is becoming more expensive, and banks really have big hole in the liquidity. So its interest rate margin currently below actually zero. And in absolute terms it is negative because they will have to pay more than they get from the loans have been provided. And Fed somehow have to plug this hole. The only way how they could do this is just printing money. This hole might be different. If we talk about purely the banks, just imagine that banks have approximately 12 trillions on the balance. Of course, not banks are distressed. It's probably somewhere around 1.5 to 3 billions, maybe trillions will be enough to fix this problem. But we forget about budget. We forget about the trading deficit. We forget about refinancing of the government debt and paying interest on this debt. All it's together, it really could bring approximately around 4-6 trillions might be printed to close this hole in the nearest term, within the 1-2 years probably. Actually, we have talked about this in yesterday's Forex report, and today we also share with you with the Bank of International Settlement have made the analysis of the United States economy and have come to the same conclusion, that the government will have to print approximately more 4-5 trillions to bring balance of the Fed somewhere to the $12 trillion in the nearest 1-2 years. And currently, actually, in the minds of the investors, as I said, it's a really simple question. Everybody who are just following the common sense, watching the TV, looking for the JPO statements, or Janet Yellen, who is trying to assure people that everything is stable, no problems, we're control the situation. Maybe this is really so, but just put yourself in place of the people who are, well, actually have deposit in the Republic Bank or Signature Bank or some other bank, Deutsche Bank, for example. And you see what is going on, you see this atmosphere in the headlines, and they just start thinking what to do. Well, maybe they are correct, but better I would just withdraw some, at least bulk of the deposit. Rest a bit, but withdraw, put it somewhere in home, or just buy the crypto, or just, well, some money instruments for some time. Maybe later I will return back, but currently I just want to become and don't worry about these assets, or just buy something and buy a new car, for example, or something to invest. And many people think in this manner. This makes us think that hardly they could really fight this fire soon, and this tendency will continue. We will get not really big bulk of the banks that breaks fast, but we get gradual breaking of the banks in a long-term period. With all this atmosphere, it is difficult to suggest that demand for gold will start decreasing. We're talking about only the public here, but we also have the hedge funds, we also have the serious investors, and some other reasons actually. So, and today you even could see in a Telegram we have shared with the chart relation of the call to put ratio on SPDR fund options. It had jumped to really many year high. So people just goes crazy with investing in the gold. Actually, this is not surprising for us because we have suggested it even last year that it should happen in gold to invest in the gold, and we still think that we should invest in the gold. Many people argued that, well, it will be high interest rates, how gold will perform in high interest rates, but at the same time, don't forget that it will start printing. If we will have the high interest rate, this will be not be real high interest rates. The real interest rate will remain negative. And in all this mess that you could see around, it will be question not return on the investors, but it will be question return of the investors or investments. So in the current circumstance, I think that demand for the gold is really entering the new stage of the long-term trend. It will jump, and I will not be surprised if we will see 43,000 level in the maybe 1.5 years perspective. In this case, we even not mention any foreign affairs, political affairs, so which is actually also is a big bulk of the problems. Speaking about technical side, in the shorter term, market stands tight between overbought area, which is actually on a monthly and weekly chart, and near standing support. So this is relatively tight range. But on the monthly chart, we've got really big confirmation of the bullish ambitions because market stubbornly stands and shows a really big jump out of the yearly pivot point. And in such circumstances, usually it proceeds higher to the pivot resistance one, which is 2057. Market has erased huge bearish engulfing pattern that we've got previously. And it was actually a reason why we were suggesting a bit deeper retracement on the monthly chart. So already we're happy that maybe we'll get back our 16 level to buy more coins, buy more bullions, but this haven't happened, fortunately or unfortunately, but market's going higher. All this stuff makes us think that retracement probably will be tight, not very significant, I mean in the depth of the retracement. And once the overbought condition will be corrected, market will abandon it, we should get another upward action. That's why on the daily chart, currently we are not considering targets, at least on the next week, above 2010 because market overbought on the weekly. At the same time, probably an area around 1916, 1930 we should treat as a floor because this will be daily oversold. In general, we could suggest deeper retracement to the 1860, 1880 area just because of the strong overbought on monthly charts usually happens. But in the current circumstances with the oversold right there, it's probably these levels we're not considering by far. Instead of that, we should keep an eye on the way how market will perform in this area. So actually we talked about this on Friday. If you take a look on the 4 time frame chart, that might be the triangle consolidation. If you will see it, it means that market is creating the power for upward breakout. It's just consolidating, building an energy without any significant pullback, standing above the confluence on the 4 time frame chart. Besides, as we said on Friday, inside of the triangle we could get the butterfly and take a look at 1618 of the butterfly is 2056, which is perfectly agrees with the yearly pivot resistance one area. So potentially I'm not excluding the moment where we will get the butterfly with the next upward action to the 2056. So this is our short-term view on the gold market. On Monday, we think that we could focus on the retracement from this actually upward swing and see what will happen around 1960 area. Because if we'll take a look at the 30-minute chart, we could consider this ABCD pattern. COP stands 1956, right near the 618 support. So potentially that might become the point where market could reestablish the upward action. And here I think that the level that we could consider and keep an eye on what will happen around it. So that's approximately the scenario that we intend to follow.